Good evening, everybody. Hope you can hear me well, nicely and squarely and fairly. Let me know if you can't. Looks like the visuals are a little bit unusual at this point. I want to see if I can see. I've got two sources here. Okay. Let me know if you can hear me. Okay, so theoretically we are about to start, and welcome to the 2019 Roadmaps. And just remember, this is general advice only by Best Trading Proprietary Limited, corporate authorities represented for AR 289519 Alpha Securities, AFSL 330757. The address is level 222 Pitt Street, and this does not take into account any of the objectives, financial situations, or particular matters. The best thing I can tell you is that trading is risky and investing is risky, and you have to be careful doing it. Otherwise, you have to have lots of money and don't really care. Even poor James Packer is caring about his money these days. Imagine a billion here or a billion there, and then he starts to get worried. So we talked about Bitfinex last time, and last time we were talking about a message from the gods that came down around about that 10,000 area. We're also saying that the Bitcoin tendencies showed the current strength, and we're talking cryptos here of course, may last till late June or August. Let's have a look at what's happened, and I'm not going to labour cryptos. But what I am going to do is have a peek. And we can see here it got up to pretty well where that angle was. The high was 91.09, that angle from God. And I think we'll find, I don't know why it's gotten wiped off, but anyway, where is it? Where's this picture basically? Up here, and this was on the weekly charts, so it came from those two tops there. Let's have a look and see where it is there. Oh, it hit it almost exactly. So if it takes it out, gets above, it'll blow through 10,000 pretty easily. At the moment we're a little bit of hesitation. Let's pick it up here. You can see it's had a little bit of a dip. So far the movements up are attracting a bit more volume than the movements down. It's about the only thing I can tell you at the moment. I just want to see the cycles work. Sorry, I've been using my glasses all day, so my eyes have been finished right now. Let's get down to using this. Notice that it's trending up on the weekly charts. Notice that we also seasonally, we're kind of coming out of the normally good period and into a bit of a choppy 3-week period where we've got some violence going on. So you don't want to be too sure about your cryptocurrencies. I'd prefer to be waiting back down around this 6,000 area for a bit of a snafu. 6,000, 5,800, 6,000. That sort of zone is the right area for getting involved with the cryptos, particularly Bitcoin. It's hit the head dip, so your trigger point is a break above 9,200 to get bullish, but at the moment I think it's going to be tougher. Are there any cryptocurrency questions that you've got that may be useful? Maybe it's no screen yet. You've got the screen, Charles. Is that all good now? Let me know if you've got the screen. Pretty good, thanks. Okay, no cryptocurrency questions. So I want to keep it lean, mean, and pretty unkeen at the moment. And keep it big picture and simple. We don't have any cryptocurrencies for the don't have anything that is giving us any idea about wave patterns at the moment. We won't cover those today unless I see one stick out like the proverbial dog's balls. Welcome to the Forex Roadmap. So what I'm saying with the Bitcoin is Bitcoin's okay, but it's probably in the congestion, so you'll probably start to see other cryptos running, but Bitcoin not catching up. It's a sign of a top for a little while. So the Forex, again, we had to sell Mexican peso, buy US dollars. First week of June from run into, sorry about that, should be a run into third week of July. Now this is the movement. We've been talking about the US dollar declining this year. And I think we've seen the first start of it, the first sign that's more definite. This is the US dollar index. We can see today it's managed to get down to that bit of support line that we like to see. At the moment, a break below 97.5 would see 96.88 or 96.99 on the downside. So US dollar, we are short from up at these levels again. We've re-shorted it. I'd like to take a bit of profit. It's now at 97.65, so we'll do a bit of profit taking on the short position on the short position that we have on our PHG trade. I just think that makes sense. We probably want to take profit on 1/4 that we re-established previously, or 1/3. I think we did 1/3. They talk about the futures contract in Bitcoin being taken off, but there is actually a more important one that's being kept on at the moment. So this is our this will be our sacrifice. We got short at 98.2, short again at 98.06, and then resold at 98.03. So we're going to go buy TP 1/3 and at 808 PM 1/3 June. It's currently trading at 97.64. And then we'll resell 97.89, 1/3, re-establish. Now, or that would be if it breaks down below. If it breaks down below 97.50 or a break below 97.50. It's a bit like the S&P trade we took the other day. Okay, let's move on. Now, I believe the Aussie dollar also had a bit of a rally today. Now, this is because of commodities. We are starting to see the inflation come in. So we've been trading long on a buy today. Let's start. We entered on this one. Now we've been happy with that. Stop is at 69, and we were entered on the 3rd of June. Entered. So we're hoping for a bit of a reversal in these currency things at the moment. Let's have a look at the Aussie dollar and get some dreams up. 70.68 would be the normal target at the moment. Expect towards a break above 69.70, targets 70 or 70.68. The euro I've been shy about getting involved with, and I still think that that's probably one of the later movers. The pound is not so flash, so it's a commodity driven move. Let's have a look at see if we've got because commodities are starting to show signs of inflation. Kiwi is actually gotten better. That's the best I've seen the Kiwi for a while. Needs a break above 65.90 and then looking for 0.67 on the top side. That's not a weekly chart, but that's an idea. In terms of the Forex, we want to look at the Canadian dollar as well. Now that's not doing as well as the Kiwi and the Aussie. Still not doing it. When this goes up, it's a US dollar strength. When this goes down, it's Canadian dollar strength. So normally we'll have a quick look at what seasonals do in the Aussie. Generally it's this half of the year that we start to get stronger, if I remember correctly. It's more just starting up for a little bit into June. No, that's something else. We normally start to get some strength, which we have. Normally start to get it in May, and it lasts until mid-July, and then falls off the cliff. So at the moment we're looking for 71 cents or something like that on the top side. What about the US dollar index? Let's see. We can see a gap down in the US dollar index, and that's a bit wacky, isn't it? So we've gone from June to September contract. That's indicating a bit more strength. Notice it seasonally peaks now, so I'm pretty happy to take a bit of profit, but expect it to go lower. Are there any questions about currencies? At the moment, I think the US dollar is, for reasons of commodities and grains, starting to get weaker. And the weaker US dollar is usually synonymous with stronger commodities. Grains have been the ones leading the charge, and we'll talk about that in a second. So the buck is important. Aussie dollar, I think, could be mid-August low. Let's talk about commodities here, and remember our disclaimer and warning. And I think the inflation genie is out of the box. For so many years, central bankers have been going, we want inflation, we want inflation, we want inflation. And what has happened is that China has suppressed inflation because they make things so cheaply, they buy things in such large quantities, they get an advantage. They have fantastic transport systems, which means they can do whatever they feel like. And yet, India is the next in line. It can't do that because its transports and communications are really not up to scratch for the rest of the world. So the inflation has been suppressed because of China's ability to do what it does best. And I think you'll find we're seeing the first signs of the grains jumping out of the box, coffee jumping out of the box, and the inflation genie means prices are going up, and the governments will not like it either. Cocoa, we don't see anything in that. It's nice that it's been dropping, but let's have a look at corn. Let's first have a look at soybeans. So there. This is a very powerful move. This is up from 790 to 890 in basically 2 weeks. That's not what we normally see. Go back and have a look at that on a monthly chart. This has had a big washout. I think the greens are in play. What about corn? Well, I think you can see $11.72. We'll start be talking about beans in the teens. Now this is the monthly chart of corn. Notice this, a massive base. This is probably at the start of a big run and it clears through $4.50. Look out, bucko, you're looking for $6.50 or more. What about soybeans? Soybean oil. Monthly chart are not showing us that much fun. Let's see if it's soy meal is giving us more fun. Like again, I won't be stopping here hard, but notice here a big reversal bar on soybean round. What about wheat? This is what a lot of people like to eat but cannot stomach. Now wheat, again, a big long base. I don't really like the way it's doing this pattern, but nonetheless, it's still got some juice. And we'll be looking towards $6 or $7.48 in our dreams. Is everyone happy with that? Grains are the basic stuff of life, and if they start getting expensive, people start to cry and we start to get revolution. Seriously. Rough rice. Not quite so exciting as the other couple we've looked at, but seriously, it's not that bad really. Nice long base. Been basing in this area between 1350 and 950 for about 4 years. And if it starts up and clears through 1350, then we've got probably a run that would last up to about $18. Everyone happy with that? Okay. So we're getting inflation, and these signs are appearing in the grains. The other place we look for inflation would be gold. There's 1, 2, 3, 4, 5 structure. This is a 5-wave structure with an ABC decline. Okay, so gold is showing a bit of inflation. Bonds are not showing inflation, they're showing fear of something. They're seriously showing fear of something. Looking at 155, these are good, these are strong. Bonds are from where we come from. And looking for 161.24 30 seconds, and possibly 166 and 27 30 seconds. In the background we see coffee. This is a big boomer in coffee, and we've seen these sort of squeezes up in this, not in the same way. Notice that we have a retest here, so there's more of an ABC-like pattern, and if you can get coffee down at 99.48 or buy calls if it drops, that would be good. Looking for 120 to 121 area on a bigger picture. So coffee has got something. It has lacked it before. When we talk about crude oil, okay, let's talk Chinese on now. Notice here, we haven't seen this week's print come through in terms of data. You might be able to see it here if I look. The pullback down to 94.43 would be normal, but the fact that this week, if it starts to break last week's low, we start to worry about Chinese iron ore. And we'll talk about BHP a little bit later, but BHP's been doing well because of Chinese iron ore, yes or no. Now, it's given up all of the extra buybacks and all that sort of stuff that it could have been doing. special dividends and whatever it is. Franking credit redistribution. We're kind of getting terminating patterns here. Notice that, that's a fairly strong move there. Below 94, it's in trouble. Copper is another one which I've been negative on, which you all know. At 300, we were thinking of 247. It's now likely to approach that 247 area, so you've got a decision point, keep asking. The other one that is something of importance is nickel. And I might refer you to all the bullhorns and bear pause warnings that I did this morning. I noticed our favourite Western Areas has not really done anything much lately, and notice that we've got a little of overlap in the nickel price, so it's really stuck in a little area. Really. It's not much. It's not much to think about. It needs a break above 900 to clear its brains. We've had a dip. There's nothing to say that it's actually a reasonable dip down to 832 and 818. So it's within all. But if you want to buy some nickel, stop the loss should be below 796. 796. Okay, so do we want to talk about any other commodities? I think I've covered quite a few. We hadn't looked at crude oil. Crude oil's kind of got a lower top, hasn't it, really? You know, I reckon it could go 32.06. There was a lot of kerfuffle about trying to get the crude oil price up. There's a lot of scamming about, you know, actions by Iran and Iraq together against the Americans. I don't see that working. It didn't work anyway, so I think you'll find the market's long and they've tried to goose it up and it's not going to work. No questions? Let's move on to some equities. So the inflation gene is in there. I can't add much to the bonds other than notice that bonds are rallying into the right time of year as we expected. And a high in mid-July is probably the go. Copper, we talked about making a high in mid-July. That's going to be difficult. Coffee, we were looking for a high on the 24th of May out of the blue before it slides. I have to say the structure indicates something's changed, but don't rule it out. Just don't rule out that it could be a slide. Be aware of it. And last time I said, guess what, I like it, so I still do. Soybeans, looking for a high in mid-June. That seems to be coming true from what we were talking about. That's part of the forecast. Wheat, high in third week of June, low in early April. Let's go and have a look at the veracity of those statements to see how close it was. Obviously those are things I did in November rather than other times. So April? No, not really, because end of April was low. So I'm not that clever. But it still feels good. Well, that's wheat. Let's go to it's okay. It still feels like right for the commodities. They've been suppressed for so long. Now we have a couple of trader dates in June. We want to buy natural gas third week of June for a run into first week or third week of July. 10-year notes by third week of June for a run into first week of September. We're not doing waves today. That will come as a byproduct. Yay! Yay! Okay, so let's welcome to the World Equities Roadmap for this today, which is the 3rd of June 2019. And just a warning and disclaimer, trading is risky, this is not personal advice. It may not be useful, but just remember Alpha Securities AFSL is 330757 and Adest is a corporate authorised representative at AR 289 of Alpha Securities. And we can never give you the best, can never give you perfect advice. Hopefully this is useful advice without getting your heads knocked off. We've been told this is the year of the pig. I've married 2 pigs. Chinese astrology. Both wives have been Chinese astrology wife pigs, which means there's a significant birthday this year. It terminates a fire cycle. The cycle in stocks that economy have been up. Terminations don't come easy. We do notice that the Dow has had 3 tops, 3 major tops. Let's talk about these things and get everything going. Let's do it on a weekly chart. We can see these tops. It'd be nice if I could use this. That's 2018 in January. This is 2018, I guess it's October. This is just recent. 3 tops. Now this was the sort of top that we got on a shorter term basis before the 1987 crash. Now, Charles is saying there have been floods in Midwest USA, potentially this is helping drive commodities. Yes, that should help, but a lot of the commodities are now produced so many different places that you would think that it's fairly spread out. Brazil's got huge amount of stuff to spread. Okay, so what about the S&P? Now, I ran some things, I looked at some stuff, and I will start pulling that out. Might talk a little bit about them later. If you know what I'll do these now. So I use this for a bit of ratio analysis, and we look at the Dow movements, and we'll notice a couple of things. The Dow 26,828, 126 days up. If you understand a few things about that, we have 84 days of range down, a range of 5,395 Dow points. We had a top on October 3rd, 2018. And we just see that this has been jiggling around and poking around on the Dow with a triple top. I think they want lower interest rates because they've run out of options. And it's very hard to see this triple top in the Dow, because you'd normally think that if there was aggressive selling, it wouldn't be able to have 3 goes at this area. But it has. So I think most of the US market is long. They probably want it to go higher. So I think even if we get a good pullback now, there'll probably be another chance of a new high. That's the Dow. Now I want to look at the S&P, and this is the intermediate. Now, last time we talked, I said I expected a pop to a new high. And notice over here, the high in September 21st, 2018 was exceeded by just 8 big figures. So the high here was 29.40 and the high there was 29.54. So we have a double top here. I don't know whether it made a triple top. Let's have a look and see if we can see the same thing in the S&P 500. Like this could be huge. Yeah, there we go. I didn't even have to remove the, get rid of the circles. It's got a triple top here. And recently the high at 29.37 was a mere retest. So let's call this, there's a lot of ABCs and X and YZs and all that sort of crap that you could go on with here. At present, I just don't think it's a place to be buying unless, even with lower interest rates, it's not working. It's not getting to new highs. And what we just saw with the S&P obviously was a big smacking, big smacking on the weekly charts. When we look at the monthly charts, we don't quite see. We see an outside reversal day, outside reversal month, 29.54, 29.49. Remember I said last time in, I think, I expected a bit of a probe to new highs and then a failure. Well, that's what we've got. We've got that on the monthly chart. So far, the volume hasn't been very high to the downside, but we could expect a range down to maybe about 25.32. $25.32 or thereabouts. Okay, what about the Nasdaq? The thing that I've noticed with the Nasdaq is it's weaker than the S&P. Notice here the range has been a lot bigger. It's weaker. Notice we don't have this over here anymore. We don't have that. We simply don't have that third top. It's pushed up, diverged, and then fell over. So the Nasdaq is not as friendly towards equity investors, and it's probably overloved because guess what? If Apple has to buy phones from China and China has tariffs on them, then Apple phones are going to cost more, and nobody's going to want to pay so much in $1,500 for a bloody iPhone. One of those X's, I think that costs $1,500 in the States. They're not cheap. So the Nasdaq, I'm cautious of. What about the volatility index? Let's look at the monthlies on that. The monthlies are still giving us nothing on the volatility index. That may start to come up this week. So let's go through what I've been calculating previously. Terminations don't come easy. Tell me about that. Last time our natural resistance was moving up in the Dow. We might expect a short-term low around about the 7th of June. But technically the Dow has stopped for 16 months. What I wanted to do was to show you the mass pressure chart forecast. We're kind of in this period here where it can have a slide. I don't think that's a late August high. I think this one's the late August high. A normal cycle would be looking for a mid-June low. This is a normal year for the Dow Jones Industrial Average. So I haven't been bulled up, I've been bared down, and that's really what we look for. So don't be too bullish. Might be another couple of weeks. I did say, I think 5 weeks or 8 weeks. We're coming into that zone, so the 7th of June may be the low for a bit of a rally. You can buy it back then. Seems to be the right sort of timing. Mark probably said, Stephen, so what if the Dow correction is down to 50% and heads back up? If it goes past the 60% correction, then we are in trouble. What would we be in trouble about? You mean with the bear case? Yes, Stephen? Yes, give me an idea what you mean by that. Bear market, yeah. Now what we've seen is a 38.2% retracement on the Dow, and you've got from this range. That was last night. So the first thing is, you might think, that's no good. You might think, that's no good at 38.2 for a bear. Right, but at the moment, if it breaks 24,800, you're looking at 23,616. So just look for it. It may hold. I don't think it will. Let's see what the E-mini is doing right now. Because it should give us an indication. See, it's still weak. Next 38.2 is at 27.19. The S&P 500, sorry, 27.15. And the S&P 500 index is down at 27.22 as a target. And what I'm saying is that the monthlies on the S&P futures, S&P cash, are down. You don't see this every day. And if you look at this one and use it as an example, you might have 1, 2, 3 months of down. Okay. The 50%, if you're talking about the 50%, heads back. If that corrects down to 50%, could go higher. That's the S&P equivalent is 28.39. Just have a stop loss under there. So at the moment, I don't want to get too bullish. Obviously, nice run down, but Europe's not taking it up. So my strategy is to sit tight till we see a decent rally. What about the UK FTSE? I think this might not be the right data. Yeah, data's a bit dodgy. The variable product. You see down to 68.66 on the downside. I bought the crap out of the E-mini at 27.32 for rally. Take a look at the today. I've got 120 rally. Nice one, right? Pleasing. But I'm not seeing that on the bars. Okay, so you've got 27.34. Did you get a 34 print or did you get a 32 print? Or are you talking, this is the September contract, so you got it on June. Okay, so you've got a, yeah, there was. I saw that today too, Mark. I didn't point it out, but let's have a look here. I did point out the Santos one. Yeah, so these are way the quality down here. I did see that. I still don't feel like it's right, but if you've got a good rally out of it, that's great, man. I still think it's trending down, so I don't want to get too in front of it. Let's give us a go at looking at, we looked at the German DAX, but we haven't probably want to get data updated here. The German DAX has arrived at the 38.2 from a bigger retracement area. But technically this isn't the right way of looking at 38.2 because there's overlap here on these swings here. There's something not right about that. Can't put the figure on it, but it's there. Euro Stoxx 50, sorry, I'll wake up, that'll become more interesting. That's kind of done a 44%. So there's something not right because why should the Euro Stoxx be deeper than the German DAX? The 44% retracement is a function of a lower order Fibonacci ratio. And so it's heavier. It's not dead, but it's still heavier than the German DAX, which is not good. So let's talk about some of these things. So I think we've still got a bit of a suppression session. We haven't seen enough short skirts, and periods when to make money. We see here 2019, 2000. We're in the peak of these cycles. I told you before that we're in the peak of the Kondratiev wave cycle, if you like, 1950 to 55 years. So let's look at the S&P. We've already seen this. We think it's got a B wave. It's a regular B wave rally on this one. So I don't have reasons to buy. Forget about these wave counts, but these are the past wave counts, like the All Ordinaries and XJO and the Dow Jones Industrial Average and Dow Transports, the Nasdaq, the Nikkei, S&P Cash, S&P Futures are wave highs that maintain up. So I want you to watch these dates important. We may get a rally from early July into August, but it could be suppressed by this timing. July 7th to July, end of July. Now basically, normally at that time, cycle-wise, they should be strengthening, but I think it may be muted. Something to watch for. I've been looking at these tops. This is the Dow tops. You can see these ones. 450, the high at 26,735. That was the last high on the 1st of May, earlier this year. 451. That's basically 360 degrees plus, or solar degrees plus 90 degrees. We see 210 sitting there. That's a multiple of 30 degrees below 180. At the moment, there's good reasons why the Dow's been topping in that area and failing to keep on going up. It's just everyone owns the stocks. Everyone owns the S&P. Everyone owns the Facebook. What are those stocks? The ones they call them Google, Alphabet, etc. Facebook, the FANGs. Notice over here, the number of years we have is 0.618 from the high on the 18th of September, 21st of September 2018. Notice over here, May 2nd, a nice top. It was okay, held for probably about 2 or 3 years. That's an 8-year anniversary. Last time we had some conclusions that the bear ducks had lined up. Now, there is a little bit of a bullhorns warnings coming, but I'm not that happy with it. So my conclusions are, stick with the bear case for the short term. Mark, if you've taken some profit or you've gone long, then make sure you take profit quickly on those shorts. That's really what I can say in the US market. A little bit more time, maybe 4 or 5 days before it has a true bottom. So welcome to the ASX Equities Roadmap for 2019. This is general advice and only by Best Trading Proprietary Limited, corporate authorised rates, representative 289519 of Alpha Securities. Alpha Securities AFSL 330757. Address is level 222 Pitt Street. This is general advice, does not constitute financial product advice and does not take into account your investment objectives, financial situations or particular needs. Prior to seeking advice from Best Trading, should pertain to your broker's financial services guide and the product disclosure statement. So I've got some questions today. You say zero your stops. Yeah, get to break even on your stops. Yeah. I mean, normally they might want to make it look bad over the weekend and into Monday, but I just don't get the feeling they've got the ability to rally it much. I think the whole world owns too many US stocks, and this China trade war is going to make it harder for US stocks that live off China to make money. So what are the shares? MMJ Photo and ZLD, look like for a couple of months. Now I have to be honest with you, I don't like marijuana stocks because I think they're all full of smoke. They're more blowing smoke, really. And the bananas have been excited about these things for ages. And look, the Zelda, I gave it a bad rap. And this is MMJ. I remember these excitement periods. It just never got up. It was overpumped. And you see in the US, they just haven't been really doing well with the medical marijuana stocks. Because so many people don't have a grow pot. And at MJ, we can see nothing interesting. This is a weekly chart. There's nothing interesting. It needs to get above 28 cents to be interesting, and then maybe look for 35 cents. At the moment, I can't see anything. Zelda, beware of the Greeks bearing gifts. Now, Zelda, we had some good runs up here. I think I took some profit on the ones I had around this point, and then he got out of there because I think I might have got stopped out on the last one. But Zelda has consistently dropped 4.2 cents. I don't trust it. I don't trust the management. It might be forming a base, but I'd rather buy it up 3.1 cents or a break above 6 cents than anything else. So, I don't really think much of these ones, especially because the bananas pumpkin. Now, what are we talking about here? The All Ordinaries Index. This is the path to forecast. So it says it's looking for a top in June, a low in April, and then a September low. Now this is different data for different folks, but this is the match pressure chart. So you'd think that it might have some bearing. At the moment, if you remember what I said about the period from the 7th of July to the end of July, it's quite possible that there is weakness in the Australian stock market, even though the cycle should be pulled up. So don't be too disturbed. We are looking at different world. Now, this is the All Ordinaries Index, because I look at things in 3 or 4 different ways and come up with a conclusion. At the moment, we're kind of in this middle period where it could go up later, but it's probably just going sideways to down now. Just remember BHP, that April 2011, April 11th, the 11th of the 4th, 2011, top 49.81 top. We saw a top 8 years from that date, basically, at April 9th at $40.13. The top in the 16th of May, all-time high, was 11 years to the 16th of May. So let's have a look at BHP. BHP's got a bit of a hammering, and notice it's been lifted up. Notice this is the US BHP, and it's violating some old tops. There's nothing really to go home and cry about. BHP in the ASX is having new lower monthly lows last month, but not lower monthly lows this month. So we're confused. It probably gets negative below $34. So I don't know how I said that on the BHP, but we want to talk about that. The materials index normally has a low in early July and then starts up again. So be waiting for that. The financials. We've gone past this into the high in late April, but generally it drops down into end of June, early July. We're talking about waves, these things. Last time we were looking at All Ordinaries Index topping, information technologies topping, and let's have a look and see what information technologies have done. this has really been getting hammered, and I think it deservedly has. Everybody's into that. Questions without notice, let me know if you need to send it to you next time. In the monthly charts, Macquarie topped on May 2007 and SJ topped November 2007, a 6-month wait. On the daily charts, since the 1st of May, correct. This is very true, Charles, and that's something that I was talking about in 2017 as likely in May for a top in Macquarie Group. That didn't happen though because I guess it's the wrong cycle I was applying. Now, Charles is saying Macquarie Group is very weak compared to the other big banks. 136 down to 116, except Westpac's not a bit weak. And I might, if I wouldn't mind doing this chart, I'll copy this in so everyone can read what you're saying, because I may not cover it as well as I could have. So is Macquarie Group leading the banks? Well, yeah, well, that's a good question, because Macquarie Group was actually a leading light quite some time. And back over here, as you said, it was up about $97. There was $98 in the top, and it just got slammed and couldn't even manage to rally into October before the big decline. So yes, it is something you should be looking at when it's got issues. At the moment, I'd say it's failing, and there's divergence like crazy going on, and everybody like Macquarie Group, and they don't really pay you a big dividend. There's a bit of a dividend, but they don't compensate you. So that's Macquarie Group. Now, Andy's asking about another one. If I can call for the questions later, Andy, if you can just hold those a bit fire. So I want to kind of, so software technology, we've seen a few of those bigger stocks which have come down. So I want to talk about natural support and resistance. Natural resistance, sorry, that should be around the other way. It should be support. Yeah, it should be support right now. Apologies. $62.80. That was previously old resistance and it's now support. But if it, basically below that 62.60 area, it gets ugly. And the ugly target is to 57.20 or 54.60 on the index. So I'm not in love with the index. As you know, I've kept us in cash for quite some time, which has been frustrating and annoying. But today we saw the silly mid-off, silly mid-on player get hit by Mr. Hayden. The All Ordinaries looking at natural support at 63.20. The financials below 60.80 is bad. You might think 6,000 is more important. Here's our trader dates, and you can see some of these are interest rate products. Buying Australian 10-year bonds early June for run into late June and maybe mid-August, even first and second week of September. Buy 90-day bank bills first week of June for run into late June, early July. Buy Australian 3 bonds early May for run into late. Forget about that one. Buy the Bank of Queensland for run into mid-September, maybe third week of September. Third week of October, apologies. Buy CBA first week of June for run into third week of July. We're now in that zone, and CBA is strong, so I'm happy to do that. Buy CIMIC end of June for run into third week of September. Buy CSL end of June for run into till the end of September. Buy Flight Centre late June for run into mid-July. Lend-Lease buy end of June for run into end of July. So a bit of property index stuff working there. McMahon Holdings, which I think is isn't it services to mining services or something. End of June to end of July, August. Buy the SPY end of June to mid-July. Buy Wesfarmers mid-June to mid-August. Buy Westfield, which is now that urea thing, EIU-URE or something, or URX, I'm not very sure which. Last week of June for running first and second week of July. So we've had a couple of questions, and we're talking about GMD. And let's have a look at GMD. Top 480. General Minerals, I guess it is. I like the fact that it's run away from this area of support here. That's good. That's a reasonable tick. First tick, we look for 3 cents or 3.5 cents or even 4.2 cents on the top side. Stop loss should be below 2.1 cents. On the weekly charts, we can see it's lined up really well. So your ducks are lined up there, Andy. So buying it, it's a little Oz gold producer and explorer. Looking for 3 cents, 2.9 cents to 3.4 cents. I don't mind it. You could even have a stop loss at 2.1 cents or a bit more. Now, next question is, we're not actually getting into the deads and all that sort of stuff. This is a little bit more whatever. Now BSL, this is a turn up for the books, because you'd think that BSL, BlueScope and BHP would be similar in some ways, because they had that big move up at the same time previously. $8.16 there, Gordon. If it breaks down below $10, that's not so good. What about the BlueScope steel? So $8.92. A break above $12 is the clue. Okay, so that's the deal. That's the trader date. So we're now moving on to bring out your dad. QBE trying to get out. Just went from around $13 to $11.20, looking like a retracement back to $13 or jump ship. Yeah, that's kind of a surprise to me. Not that I've been looking closer at it. Yeah, it's a jump ship. And if it changes, get above $11.80. Yeah, definitely. Not so flash. Bring out your dead. Any other bring out your deads?
Hi there. It's currently 20.
No, but yeah, I'd just be jumping ship there. That's not good volume. Really not. Looks like on the weeklies. Not good on the weeklies and monthlies. You're probably looking a test of that $10 area. It just likes doing that. Did it pay a dividend or anything? Did it do anything around here, I bet? But whatever it's done, it's not good. Okay, so that's it for bring out your debts. We're all very quiet, aren't we? What about back on your bikes trades? Right, Mark. Okay, Gordon. That's back on your bikes, LNG. Now, this one has been incredibly annoying. It's not boring, but it's incredibly annoying. It's just been smacked. And it's lower than it was when even Mr. B started his campaign. 12 cents was kind of that area. Mr. B's dad, actually. Don't know what to make of it, because this stuff has always puzzled me. Does it actually make anything? Does it actually sell anything? Why is it doing that? The answer is we have to be thinking that this is not good at all, and basically trending down, so jump out on those 35 cents if you get them, and just have a stop loss below 23 cents if you don't get out on that run. FLN, Freelancer. Freelancer has just been gyrating. Now, yeah, the gig economy. Apparently now Victoria wants to enclose or envelope anybody who does a short-term part-time job in the bosom of an employer, and that's not going to be happy for these sort of companies, because when they just do one job, what's enough to be under the auspices of government authorities in Victoria to say this work is fair or this work is not fair. So at the moment it looks okay for 93 cents and maybe $1.31, but I wouldn't be too excited about it. It's Freelancer. I just don't think what you could do is buy a break above 85 cents, looking for 92 cents with a stop loss below 80 cents. What about TNE? Tech One, submarine. Why did it do that? Is anyone a reason? There's probably a miss. Look how much it's getting below the factory trial. So expect $6.96. If it can't hold $6.80, then expect $4.80. At least a profits result back on the bike. So I prefer to look down there at 656. Bellamy's are also back on your bikes trade. Gordon, you're full of questions. I haven't seen you asking many questions in the group lately. You've been busy with other stuff. It's right for questions. And Bellamy's still suckworthy, looking for 610 on the downside. Bad news from China, I guess. Yeah, 610 on the downside. That's all I can say there, Gordon, unfortunately. Or if it gets above $11, 11.27, stock would be below probably about 10.20 if that happens. Okay, let's move on. Anything you want to bank the cash in? Sorry for yawning. I haven't yawned for ages. I don't know why. I know why I haven't yawned for Hey, you're yawning now. So, what about making the cash? CSL. Has anyone noticed that their friends are actually getting interested in stocks, or that they've actually just run away entirely because no one's getting cash? Spare money. CSL still looking for the $209. So take some profits there. Charles just said they've all run away. That's exactly what I feel. They've just run away. Just run away. It's weird. On a top, you normally get a lot of people coming. So still wait out for CSL up to those levels. AMS, which is not a Mason, is it? Eugene. It's Atomos. It's over doubled up to those highs, so that's pretty good. You probably look to buy down towards $1, but at the moment, see on a closing price basis, it really hasn't closed the month above there. So taking some cash here, if you've had a good run, why not? And the breakdown from 120 is the problem. Going to a seminar in late June will let you know how many people have fell and what their feelings are. Thanks, Mark. Thanks, Charles. It's good. Atomos. Again, this volume is probably just corrective in nature. I wouldn't worry too much about being too bearish. The other one is Zero. Is it time to bank the cash? And it would have been a very good run in Zero. It's made all-time new highs. Ooh. Bit of the days when Dan Marks was into the $16 zone. Hopefully you've still got some there. Looks like it's going higher to me. Looking towards $62.84 above $65. Expect $76.77. Then you can have a stop loss below $57.40 if it breaks out. That's from Zero. And I think that's for the questions. PHG trades, I don't think I'll work through them. Just not a lot to talk to. Let's look at the indices to see what they've overall look like. This is the All Ordinaries, which we've seen. And we did do 1-to-1 with overlap today. And I was going to point that out. So if you felt like taking some profit first thing in the morning, that might not be bad. May not be bad at all. It's okay. Taking a bit of profit. The rally would be expected to come back up to 64.72. The energies. Now I did talk about Santos for a PHG trade today. Now let's see if it broke through that. I bet you it did because the energies index is lower. No, it's still held. It's okay. Santos may not be that bad. It's still a bit scary to buy, if I ask me. Not too bad. And the other one I want to focus on is the healthcare and the gold index. To the point nearby, yes, it blew its top off. So gold is still good, looking for 67.12, 70.36, and that's helped by Newcrest, which has been usually not going up when everything else has been going up. It's not closely related to the other one. Big gap up in Newcrest, fantastic. And we've been looking for $29 and something over for quite some time. as you all probably remember, is here at $29.67 target. And that is property index. The monthlies, still pretty good property index on the monthlies, on the weeklies. With a bit of side-by-side moving lines, should still probably get up to this area here, which is about 16.19. Then we might start thinking about a failure. What about the old telecoms index? Ooh, got a bit of a slapping today. Does anyone know why that was, or whether it was just getting sick of each other? It's starting to struggle. I was talking a bit about that in today. Let's look at texture. Could be a pullback down for the breakout, or a pullback down to about $3.41. Yeah, pullback because of the breakout. Telstra and inside week so far, so maybe is it TPM that got hit? Who got hit today? Nope, not TPM. Vocus. Usually it's Telstra who gets the biggest hit. Vocus has pulled back. I think this was a bogus takeover offer. They need a few more. It'll probably come back down to $4.35. And I think it wasn't Origin Energy that tried to buy it. Was it Energy Australia making an offer on it? So it probably comes back $4.35 and $4.48 for a bit of a buying zone. Thank you all very much. I think I don't have a lot of conclusions to make, but otherwise, let's maybe talk to them. I think we have to think about how CBA fares for the overall index will stop me wrong. At the moment, we have BHP being a little bit wobbly and other banks being a little bit wobbly too, like ANZ and Westpac will stop me wrong. The XAO.ASX landed in the right place for a bit of a rally from today, so if you wanted to take profit in the mornings, I would do that on some and tighten the stop losses on the rest. I think we need more information as to whether this is properly finished in terms of the index, and I'm concerned that the 7th of July to the end of July could cause some more problems. Even if the stock market is rallying at that time, it may be a muted approach. So it's all one step at a time. There's no clear leadership in my mind on this current market, aside from maybe gold stocks. I'd like to finish it with that. Has anyone got any questions? We won't do any more stocks. I just want to do a general wrap up. Charles asked about AGL before. I didn't notice when we were doing that. I think it probably needs to get down to $19.64. We've done AGL a couple of times, Charles, so I'm kind of okay with that area there. Oh, AGL and brokers. Okay, AGL, not Energy Australia. Sorry. Yeah, well maybe they've been planning with that for a while. I've seen it. Okay, thanks everybody. I hope you've had a very good time, and let me know. I do wanted to keep it general. There's a lack of specificity. There's specific stuff that we could have done. So anyway, it's good to be back. Thanks. That's good. Okay, see you everyone. Have a good one. Bye.